following is a presentation of TFNN.
Hi folks, Tom O'Brien here. If you'd like to get
The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Hope everyone had a great weekend. Let's kick into the summer right. Create new agreements based on respect and love. Take the responsibility to make agreements with those you love. If an agreement doesn't work, change the agreement. Create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here, folks. We have the Dow Industrials down 470, NASDAQ off 66, S&P's down 40, gold contract down $2.40, trading at 13.0130. Silver down 13 cents, $16.41 an ounce. Copper off 2.5 pennies at 3.05 a pound. Light sweet crude off $1.17, $66.71 a barrel. Notes and bonds. You get the 10-year note up 1 full point plus 7 ticks, 121.03. 30-year bond up 2.5 points, 146. King dollar up 705 ticks, trading at 94.835. The euro is trading at 115.30 at 1 to 1 US dollar. The yen is at 108.5 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Bottom line, this started over in Europe this morning. We'll get into that for a second. We'll take a look at the S&Ps first. What do you have? You're coming off the highs. Bottom line, you get an expansion of volume. You're down $4 on the S&P. You're at 268. Guess what, folks? Bottom line, you get a high volume low that hasn't been tested. That's where we're going. 252.92. That baby is laying out there since the February 9th number. And if we go from this, just the SPY, and you want to go over to the financials, what you're going to see, this has been laying out here. Morgan Stanley, bottom line, you had a high volume low, but bottom line, it came down. It tested it on the 3rd of May, and it had an expansion of volume, and this is just blowing it away now. You're down to $3.50. We're at $49.73. We take this back a bit. and see how it's set up. What you're going to see is that you're breaking the consolidation. So this is a mean break, because what you do is you take the top to the bottom of it. This is saying that good old Morgan Stanley wants to run back into the $40 area. More than likely, you're going to see that 38.94. That would be November of 2016. So that is a big number. That's your S&Ps. Let's go to the NDX 100, the 3Qs. The 3Qs were holding up well, but bottom line is that the SPY, the S&Ps are dragging them lower. What you have with the 3Qs is this. The 3Qs are down $1.46. You also have an expansion of volume there. And guess what? Now, the Qs, this is where this gets really intense, because we're at 168. Well, your high volume low on the Qs, folks, is 150. That is like one monster number. It's sticking out like a sore thumb, man. It's gonna get tested. Let's go to the small caps. Take a look at the small caps, the IWM. The IWM had broken out over the 160. 62, and you're still over it. What you do have out here with the small caps today is that you have a big expansion of volume, and that's always dangerous. Bottom line, I expect what you're going to see, it's going to try to basically make it back inside that 160.62. You make it back inside the 160.62, guess what? What is game on again, which is pretty intense, is that the 142 area. So that's some monster numbers out there. Notes and bonds. Okay, so let's take a look at the note and bond market. This has been an amazing move, folks. Okay, you know, the bottom line is that notes and bonds did start moving last week. They had wide price spread. They had conviction. Bottom line, people just want their money back. And what you have out here today is pretty amazing. So in 7 business days, right? Off the bottom, we just came all the way back to January 29th inside the note and bond market. That's quite a deal. The yield right now are going down, and going down substantially. We were at 3.11, 3.11. We're at 2.77 right now. The way that the 10-year and the 30-year trading, folks, they're going to go a lot higher. Yields are going to go a lot lower. The 30 years up 2.5 points. The 30 year is almost at its swing point right now, which is 147.03. We hit 146.15. Bottom line, 30 year. We take a look at that on the continuous contract. What you're going to see, the 30 year. Now, 30 year had been stronger than the 10-year note anyway, but bottom line is that what you're going to see, the thing is amazing too, when you take a look at this 30-year, what the 30-year had done is come back to its monster strength from March of 2015. That's when the 30-year went from 142 to 165. We came back there, it finished an ABC structure on the way down. 30-year now has gained of 159. Right now you're at 146.09. If you want to see something which started this whole deal, folks, we go over and we'll take a look at Italy and Spain. So what you had out here this morning, so we've talked about this many times, because many times I'm saying, okay, how are our rates so high, and Italy's broke and Spain is broke? Well, guess what? Our 10-year is 2.770. Italy this morning is 3.13. That's not the news. What the news was, folks, is that this went up 1.5%. Went up 100%. That's almost unheard of. Bottom line, no one wants to basically lend money to Italy because they figure they're not going to get it back. They've lost 12% in approximately 2 weeks in their bond market. Never mind that you're going to get paid any interest. Stay right there, folks. Come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 480. NASDAQ is off 68. S&Ps are down 41. Let's go over to our man, Mr. Andy Hecht, as you do each and every Tuesday and Thursday. And don't forget, folks, Andy's got an outstanding show right here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Get that program right at TFNN, and you can get it as well right at YouTube. At YouTube, folks, check it out on your phone. Just go to YouTube, pull up TFNN, subscribe. It's free. All the programs will come right up. As you're over at TFNN, check out Andy's newsletters. He has the daily newsletter, Daily Essentials. He has a weekly newsletter, which is an investments newsletter. That's a Technomento Commodity Report. They both come with a 30-day money-back guarantee. Andy Hecht, well, first off, congratulations. That's the first game down.
Wow.
Yeah, it's a wow. I know. Great game, man.
That was some game. I got to tell you, that was one nerve-wracking game. My blood pressure was through the roof during that one.
You know, it was so cool. Folks, you know, it figures in Las Vegas, but the show at the beginning was a trip too. There's no doubt. It was like, oh my God, seriously.
And I live up the block from the practice facility, and I want to tell you, this morning at 5:45 a.m., the line was, you know, like miles long to get in to watch him practice today.
Really? That's pretty cool, man. Wow.
It's amazing.
Yeah. And then like, they got the guy, the announcer, folks, is the fight announcer.
Yeah,
ready
that
to
was
rumble.
Pretty good. I like that.
I love that.
Let's get ready to rumble.
Oh, that was awesome, man. Totally.
Yeah, that was good. That was good.
Totally.
That was a lot of fun. And yeah, listen, it was a great game, but we're not counting our chickens here. As you know, in Tampa, this is a team that we're playing that is a very tough team.
Oh, they're good, man. Yeah, no doubt.
They're very good. I mean, listen, I think we got lucky last night a little bit. You know, one of our goals was on a thing that could have been called a penalty, and you know, they got lucky because Fleury basically kicked the puck into the net on himself. Yeah. So it's gonna be a wild series.
It is. Good series. Yeah.
It's a lot of fun. It's a lot of fun. So we have our fingers crossed. We're not getting confident until we win Game 4,
yeah,
right?
Totally. Hey, so markets. Let's look at those markets. We got action here, man.
We got action. And I'm looking at gold, and gold is being pulled in 2 directions. You know, you got the dollar making a new high on the dollar index.
Yeah.
You got Italy falling apart.
Yeah.
And you got the bonds rallying on flight to quality, and gold doesn't know where to go, Tom. Doesn't know where to go.
This is, folks, what happens now, it's so intriguing, folks, what happens when you have liquidity events, and that's what's going on here.
Right, risk off.
Yeah. And again, this morning, okay, which the last thing you want to hear is, oh, don't worry about it. These are just markets over in Europe. They're not going to affect us. Well, Andy and myself and many of you folks have been around long enough. Let me tell you something. This morning, Andy, I was telling the story about Indonesia in 98. I mean,
yeah.
Everyone was saying, oh, there's nothing. It's, Indonesia's small. They got a small market. Well, yeah, they had a small market, folks. And as soon as it poured over to the rest of Asia, and then bottom line went from Asia to Russia, that all happened, by the way, within 2.5 weeks. And
right. And it was long-term capital management.
Long-term capital. And
right.
what I'm looking at here today, I'm trying to figure out, okay, so watch our banks. Goldman is down. And so what's happening here, folks, is this, is that I bet our banks, okay, bottom line, they have a lot of this debt.
Of course they do.
Because, give me a break. Goldman Sachs is down $9.50. It's blowing out. It's an ABC down.
Of course they do.
Right.
Goldman has it. J.P. Morgan has it. Deutsche Bank has it. Deutsche Bank's been on the rocks for a long time here because they have the most of it.
They do. And look at Morgan. J.P. Morgan. They're all getting taken apart, man. So the bottom line is that you have contagion already, and the real question is going to be how much do they have, and what type of beating are they taking? Because right now in their market, there's not a when they're illiquid, folks, there's not a bidder and offer. You can buy them, but guess what? They just doubled in price. So.
Well, you also had President Trump, make an announcement that he's moving ahead with $50 billion in Chinese tariffs, and he's putting restrictions on technology investments by China in the U.S. this morning, which kind of exacerbates what's going on in markets. And my first thought here, Tom, is we're expecting a 25 basis rate hike in June from the Fed.
Yeah.
If this European situation winds up to be real serious, which it smells like it is, the Fed is not going to move to raise interest rates.
No, in fact, let's go look at this right now.
They can't because the bottom line is, how wide are they going to let the gap get between U.S. and Euro interest rates?
Right. So look,
they can't do it.
Well, I agree, but what's interesting here right now, it's still at 100%. Now that normally moves, folks. That's pretty intense. That's at 100. That I bet tomorrow morning it's not going to be at 100.
I think that's a sale right here.
Yeah, I agree, man. Because guess what, folks? When Europe opens back up, let me tell you something, man. Yeah, when you see, I'll put this chart up of the bond fight. Now it's an inverse.
Amazing. Go ahead.
No, it's just it's an inverse correlation, but I just want you to understand how quick this went down. So, picture this. I'm going back 2 weeks. 2 weeks ago it was at 102. You're at 90. That's a bond. That doesn't happen in the bond market, folks.
No.
You lost 12% in a first world country, not a third world country.
Right. That's
in fact, it's almost unheard of.
It's unheard of. Exactly. And the central banks do not want to see that kind of volatility, and they're going to step in. They're going to step in.
Yeah, well, we're gonna find out. What's one of the Tigers was saying in the the den, as it always is. Who basically. The tide goes out, and who doesn't have any pants on? Right.
And the gold market is telling us, because gold should be trading at 1280 or below, given what's going on in the markets in this risk-off scenario. But gold is not doing that. Gold is sitting up here, especially with the dollar index. I mean, we traded basically up to 95 today.
Yeah, it looks to me, that 95.070 on the continuous wants to get hit. And listen, it can go a lot higher. What is unusual here, folks, is that normally if the dollar's going higher, bonds should be going higher, not lower. Meaning, higher in yield, not lower in yield.
Right, exactly.
My take here, Andy, is that overnight we're going to see a big bid in the gold market, man. We'll see, because there's still a disconnect here, folks, and it's a very large disconnect. The bottom line is that these rates have dropped tremendously. I mean...
Tremendously. Yeah. We have the long bond, the long treasury. Was trading at 140.05 on May 18th.
Right.
It's 146.09.
Exactly.
That's, I mean, that's a move that generally takes, Tom, 6 months.
Oh, totally, man. Yeah.
Maybe longer.
And the problem's going to be, are the banks still on the wrong side of this, or who's on the wrong side of it? And what happens is that because it got illiquid, they're not going to be able to get out. That's the problem here, you know. Meaning in Europe. Europe is illiquid right now. Our markets are liquid beyond belief. But guess what? You know, you better.
If the Fed doesn't raise rates in June, watch out. Gold will go to 1,400.
Oh, listen, I agree. You know, I agree. The kicker will be, now this is where that could change, is that if our equity markets really get smoked very hard, well, then, you know, then if it's a liquidity event, no one has any money. So then it's a problem.
You know, everything goes down.
No, I agree. I know.
That's major risk off.
Yeah.
And well, if gold does go down, I mean, it'll go to a level where it's a big buy.
Yeah. Here, stay with us another section. That cool?
Sure.
Awesome. Stay right there, folks. Andy and I are coming right back. We have the Dow Industrials down 474, Nasdaq's off 65, S&P's are down 40. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Andy Heck, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials trading down 471. You get the NASDAQ off 63. S&Ps are down 40. Percentage-wise out here, folks, you have the Dow down 1.9%. NASDAQ is down 0.8%. S&Ps are down 1.5%. Now, if we do go over to Europe and see what was happening out here, you had Spain down 2.4%. You had the FTSE down 1.2. The CAT was down 1.2, and that's easy pickings, folks. That's the bottom line. Is that's not a monster deal. What we also had when we were closed is that yesterday Brazil came back a little bit. Man, you had Brazil. Watch, I pull this baby up. This is like pretty intense. Let's see. Here we go. So you had Brazil, and this was they got a lot of bad things happening simultaneously. So Brazil in 5 days, well, in 8 days, just went from 86,600 down to 75,33. How's that?
That Brazilian real has fallen too.
Oh, it's a monster. And
lowest level since, let's take a look. 2016.
Yeah.
March 2016 on the real. And that's going to have ramifications for commodities prices, because we remember that Brazil is a significant commodities producer, lots of agricultural commodities, lots of, you know.
That's what they're talking about. The truckers' strike, they couldn't get the stuff to market, man. They're going to lose money hand over fist, folks. I mean, big dollars.
That's going to affect availabilities.
Yep. Yep.
So,
when we're taking a look at their currency, look at this. You know, January 25th, it was 3.1 real dollars to $1 US. Now it's 3.7.
Yeah.
Amazing.
Serious move. And crude oil, well, you know, that's the world's eyes are on that. We started to fall Friday. That trade got a little bit crowded. I'm not that bearish on crude oil right here. Could it go to $60? Yes. I don't think it could go below $60. I think that the global economy is chugging along, and demand for crude is pretty high here. I also think that OPEC is you know, playing some games here. I don't think they're going to increase production at their meeting. That's my bet. I think,
right.
You know,
and so what we did here is, you know, you can see $64. Well, let's say $65 is where we broke out from, and he hit 65.80. I mean, we'll see. I guess, you know, the whole game here now is going to be what is the European Central Bank going to be trying to do before they open up tomorrow morning? You know,
they're going to do the only thing they know how to do, Tom, which is just put liquidity into the market.
Yeah,
that's the only thing they know how to do.
I'm with you there. You know.
Right? It's, you know, and the bottom line is that the long-term effect is very inflationary for Europe.
It would seem that all our markets are at that point, folks. Because so picture what Andy and I are really talking about. What happens is that, you know, even as we've gone through these interest rates every single day, like, okay, how is our interest rate so big compared to, you know, basically Europe in general, particularly Italy and Spain, okay, because the GDP, you know, remember something, Italy is the third largest basically producer in Europe. I mean, they're a monster economy. It's not like they're a small economy. Bottom line, though, is that guess what? Their rates were dramatically low compared to ours. And once this starts falling apart, it's a big number, man. You know?
No, there's a lot of knock-on effects.
Could you imagine, just imagine this for a second. Could you imagine, folks, if we just went from, we were at 3%. That would be like us going up to 6% tomorrow morning.
Right.
That's how dramatic this is.
Yes.
You know? So bottom line is that if this thing goes higher again tomorrow, when this thing, you know, basically opens up, or tonight, watch it get out of the way, man. Holy cow.
Well, the ECB's got their hands full. Mario Draghi's got his hands full. They're going to talk about a change in the Italian government now. You're going to get a lot of things, and the markets are going to get spooked. And the bottom line is, just like you said, it's the banks. The banks that are holding that debt are going to get crucified, absolutely crucified. And there's a lot of banks holding that debt, folks.
Looking at this market out here today, it looks it. I mean,
to me, It's the perfect environment for gold. But
listen, I agree, but guess what? It hasn't moved. I know. Believe me, I know.
Because it's looking at the dollar. People are afraid to buy gold because the dollar is so strong, and the dollar could go higher. It could go through that 95.07 level. But the bonds also are very important for gold. When the two of them were moving together, the dollar was moving higher and the bonds were moving lower. That was bearish. That pushed gold down to 1280.
Right.
But now that the bonds are going in the other direction, we're going to find out what's stronger. And I reckon that the bonds are stronger influence because gold is a commodity that thrives during periods of uncertainty and fear. And you're going to get some economic fear. Do you remember how scared the markets got during long-term capital management?
Oh, totally, man. Yeah.
Right.
I mean, and what did happen here? This is what happened, folks, okay? It's intriguing because I remember this so well because I was actually I had a place in New Hampshire then. I was doing the program from the deck, okay? And I'm watching this market, and slowly, you knew that long-term basically was in, and then it really didn't hit for 2 or 3 more days until after that. And I remember being live on the air, and the whole market exploded, and I jumped on the boat and got all the way back.
Yeah, the other things you gotta be careful of here. There's a lot of those leveraged ETF, ETN kind of products in the interest rate markets here that are, implosive and explosive,
Oh, yeah. Yeah,
and there's a lot of them in the fund portfolios in the world. So when it starts affecting the banks, it's going to affect the $1 billion and up funds. And that is a period where governments get involved and where we revisit the too big to fail rule.
Yeah. Oh, we're gonna be there. I suspect. We'll see this the next day or 2 days, but.
So the key here for listeners is that this could create some incredible trading opportunities, no question about it. But you got to keep stops very tight. You got to take profits when they're on the table. You got to be very nimble in these markets, really, really nimble. You can't get married to any positions.
Right, and you got to watch the overnight aspect, folks. That's going to be the hardest thing to do because the reality is that at 3 o'clock in the morning, Eastern Standard Time, you're going to see some active markets, even in our future markets, okay? Because that's when they're going to open back up and they're going to figure out, okay, what are we going to do in Italy, okay? What is the president going to do? They thought there's going to be new elections in September. Now they're thinking, well, maybe we better have them before that. There's, what?
Tom, the only request I have is that they keep markets stable Wednesday during the next Stanley Cup game.
Oh, you gotta love it. Well, listen, folks, Andy's going to be coming right back with you because he's going to be doing my 4 o'clock to 5 o'clock. I'm going to Chicago to buy some bonds.
Sounds like have a great trip, and we'll see you when you get back.
And I'll be back tomorrow, too. I just got to go do some business.
I'll be doing the commodities hour an hour early today.
That's a beautiful thing, man. Totally. Cooking, brother. Thanks so much.
Thanks. Take care.
Stay right there, folks. Coming right back. We have the Dow Industrials right now down 415. Nasdaq's off 46. S&Ps are on down 33. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go take a look at some of the higher volume stocks, and this will be a high volume day, folks. So you got another pullback with volume. That says we're going lower. Bank of America is down $1.21. That's the high volume stock out there. Citigroup is down $2.85. Wells Fargo is down $1.85. JP Morgan is down $4.85. You can see those four are in the top 10 with volume. So bottom line is that they are taking those banks south pretty quickly. You get GE down 44 cents. That's trading $14.19. That's going to be going right after the lows once again. And in fact, let's just go over first and we'll go take a look at Bank of America. That's the leader. Yep, so you're down there. And all these high volume lows, man, they're going after them. Now, what's happening is this. When you have a high volume low or high volume high, they love to get tested. When they get tested, if they're tested with higher volume, guess what? That gives you the information. Your market is opening up that information. The market participants are giving you that information. Guess what? They're selling and you're going a lot lower. And that's what's going on right now at Bank of America. You're coming into the swing low of $28.43. We had 110 million the last time we were down there. We're at 114. This will pile in some big numbers. So if we pull this back a little, let me see what we get set up here. Yeah, this is going to be the same thing. What's happening in the whole banking sector is that you're breaking the consolidation that's been in place since January of 2017. That's what's going on. We had the expansion going up to the election. If we take a look at Bank of America in November, it was at $25. Goes all the way up to February 1st. Tops out at 32. Consolidates for a year and a half, and now you get the breakdown. It's a big number. Big number. Goldman, the Goldman deal, this was a big heads up when we had a major failure at the swing point. The swing point we're talking about is $250. That was the highs of 2007. We had taken it out. Bottom line, you were up there for a year and a half. And when you took it out, it was anemic volume. And then what we did do, the first month down, you had the expansion of volume. Bottom line is you were making highs with 62 million shares. You came off the high with 76 million. Bottom line is that we're already at 53 right now. We'll see where that shakes out. But you're inside the range. Once you're inside the range, or Goldman's case, it gets you game into 172. Right now you're at 226. So big number there. And we had a question about where would BAC be without all the splits. Well, let's see. We can bring that back. So Bank of America, yeah, with this, well, even with the splits, I mean, Bank of America doesn't look like Citigroup. The high of Bank of America was 55 bucks. You're at 29. Citigroup, now, this is the dog inside the banking structure. If you want to see something that's crazy, Citigroup is trading $65, right? Well, guess what? The splits, Citigroup was a $570 stock. So that is about as intense as you can get. Let's go to our man Carlos in Texas. Carlos, what's going on, brother?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing very well, thank you.
Good, good. You sound good,
Yes.
man.
Thanks a lot, Tom. I heard you're traveling to your hometown. Have a nice trip.
Oh, yeah, yeah. Thank you, man.
Oh, you're welcome, Tom. Tom, the reason I call is I need some help with the volume and
Yep.
The interpretation that we can give today to this volume. In many areas, including the dollar, I noticed that the spike on volume got a little strong, or way strong. And yesterday was a very low day based on the holiday.
Yes.
And on futures. During the week, once you do the reading, how do you interpret a day like yesterday?
Oh, that's interesting, yeah. So what the question is, see, the equity markets are closed, and so the way I would do equity markets, folks, is that I take the 4 days of volume for the week, bottom line, turn around, make it 5 days, you know, we'll average the 4 days out, add another fifth day, and that's how I do the volume for a week. The difference, I would say, that in the futures market when you're doing this, is that that's a tough way of looking at it, because I wouldn't take the aspect of just how they were traded yesterday, because there's hardly any trading really. Well, let's see. Well, the 25th. No, well, in the futures market, the S&P is not even registering. I don't have it registered anyway. You know what I mean? The 25th till today. The dollar index, bottom line is that you could take the dollar index. You know, it looks to me like this dollar index wants to go to that 95 up there. And you know, what's possible here is that the way it's trading, it's like, okay, that wants to almost blow that number away. You know?
Yeah. And like yesterday, that dollar index trading with very low volume actually moved quite strong.
It did. It had 15,000 contracts, which for a holiday is huge. Right, yeah.
Yeah. And, well, for today, yeah, I mean, it's double the number of contracts pretty much. And I was concerned about the way that you actually interpreted that, having a low volume day and a holiday, and then coming back from the holiday and explode. And
there's only, this is what also ends up happening, Carlos, is that there's only a few futures that actually open on the holiday, and evidently the dollar index was one of them.
Yeah.
And that's probably because, you know, world markets were basically trading currency, and they had to get it opened just to get some liquidity. You know.
Well, thank you very much, Tom. And
so tell me, let me ask you something. What are you doing with the dollar? What are we doing? Where are you going with this?
I've been watching the dollar.
Yeah.
Last time I was long, I actually got it stop out, and I couldn't get these uptrends because it was pulling back, and I placed my stop, and eventually I got it stop out.
Okay.
But, I don't know if you remember the day I called you when the Secretary of, I think it was King, the Secretary that says we need a weak dollar, we like a weak dollar.
Yes.
And the dollar just collapsed that day.
Right.
Well, those days that dollar has been up and up and up.
Right.
And I need that really nice. But there's always going to be another one. So
yeah, that's for sure. That's for sure.
I'm watching it. Yes, it's actually exceeding the target that originally you had, and now it's getting higher. And,
it is, and
well, hopefully
this is
stops.
so. This is the dangerous part too. Listen to this, folks. So we have a continuous contract, and like the swing point on the continuous contract, you know, is this 95.070, but the way this is trading, man, this actually, which is going to blow my mind, but it can really get a lot higher. You know, it's because it's like when you come into swing points and you have this type of wide price spread, which we have, it's like that can take that out in a second. So I'm trying to figure it out myself. I mean, technically it's saying, hey, guess what? 99 is game, and if 99 is game, it's going to be like, what the heck is going on? That $99 right now, if we went straight, folks, would throw these markets into such turmoil, it'd be insane.
Yes. Thank you, Tom.
Always a pleasure, Carlos. Have a great one, man. Have a safe one.
Thank you so much.
Stay right there, folks. Dow's down 370. NASDAQ is down 31. S&P's off 28. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 390. Nasdaq's off 34. S&Ps are off 29. And, you know, we were talking about, Andy, we were talking about those Fed fund futures, and they just moved just a speck. It's pretty interesting. So they just moved down to 98%. They were at 100. Bottom line is that they got to 98. This would be for the next June 13th meeting. That would get the short-term rate from 1.75 to 2. That being said, what you did move across the, going right out to the end of the year, you came down pretty dramatically. We were last week before we came into Memorial Day weekend, the December one was laying out at about 44%. Right now, that's at 15%. So the market basically is still saying that the 13th one is game, and the rest of the year, that would be carte blanche, meaning nothing else. We'll see where that shakes out, because if these equities, these bond prices keep moving like they're moving, they won't go 25 basis points. They won't be able to go 25 basis points. Because what you also had out here this morning is that you had Dudley come out. It was intriguing what Dudley had to say, too. And what he had to say, you know, there's been this inverted yield curve. It goes basically, you have camps that say, if you get an inverted yield curve, and that's where the 2-year basically gets as expensive as the 10, or it inverts, it goes higher than the 10. You have basis that people say that, okay, within a year, year and a half, you get a recession. Other people say, no, that's not there. Well, Dudley was saying this morning that if he learned anything, he learned that the bottom line is that when he was there and he was voting, bottom line in 2000 and 2007, guess what? Bottom line, he was wrong in the aspect when that yield curve did invert, guess what? You were coming in, and you were coming in very quickly to recession. And in both cases, of course, 2000 and 2007, they were basically beauties. You stay right there, folks. So we got our man, Mr. Andy Heck. He's going to be coming up next, growling and prowling with you. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there for Andy. Look forward to speaking to you tomorrow morning, 8 o'clock. Wow! Look at him, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.